So clearly food was strong during the pandemic. Beverages, not so much. I think the results overall came in better. The stock is up pre-market. But just tell us what happened, what consumers did during this last 3 months.
Yeah, happy to. It was really a very interesting quarter. I mean, we started off very strongly as a result of a lot of the pandemic panic buying that you saw early in the quarter, then moved from that to sort of softness as we went into lockdown. Then later on, and toward the end of the quarter, we really saw a notable recovery. As you pointed out, the snacks and foods business very much benefiting from people staying and eating at home, beverage business doing less well. As mobility increased toward the end of the quarter, you saw the beverage business start to come on more strongly and snacks sustaining well. So we kind of feel like we're about a perfect hedge in terms of we benefit from lockdown, we benefit from people becoming more mobile again. We're really in a sweet spot in terms of performance under the conditions that we're operating in right now. The one notable factor, of course, is lots of incremental costs related to COVID, about $400 million for us for the quarter. Ex those COVID costs, we actually would have been flat EPS on the quarter as well. Some of that will sustain, some of it won't going forward.
You wanted to dig into that a little bit. What did you have to spend on? What percentage of your workforce is actually working right now? And how much of those costs continue?
Yeah, pretty well everyone is up and running. And you're right, a lot of the costs were related to our terrific frontline employees. Providing them with personal protective equipment, providing them with additional benefits as we go through the crisis. We also spent a considerable amount making sure that our people were safe when they were out in the marketplace, servicing our customers and keeping our supply chain running. And as a result of that, combined with the fact that you saw some customers that were closing up for a period of time, restaurants and the like, the number was large in Q2, but it'll likely diminish as we go forward.
On the reopening, the business that got hit hard, what are you seeing now as states have moved toward that front, but we've seen hotspots in many populous areas of this country, in the convenience stores, in the restaurants? How's that business holding up?
Yeah, convenience stores actually seem to be doing quite well. The sort of pure lockdown mode that we were in early in the second quarter, I think is largely come and gone. So convenience stores seem to be very much back on track. The food service and restaurant businesses, the office businesses and hotel businesses, obviously that's going to take a bit longer because people haven't gotten themselves all the way back to those behaviors, and that may take a bit of time. But as I noted, when people are staying at home, they're tending to, with their eat at home habits, they are tending to consume snacks. They're tending to consume Quaker foods. You probably saw Quaker was up 23% in the quarter and profit was up 55%. That business clearly benefited from that. One of the things that we're seeing, though, is even as the markets open up a bit more, consumers are sticking with some of their habits. They went back to large and trusted brands as we have, and they really seem to be sticking with those. They do seem to be balancing, indulging with healthier eating, and obviously our portfolio plays to both. So we kind of see ourselves very much in the sweet spot in that regard.